Hello traders and welcome to our WMoption's New York session market review for Monday, August 22nd. European markets have been open for several hours now, and a strengthening dollar is weakening the euro but pushing equities up. Denmark's OMX C20 is ahead with 1.2%, followed by Italy's FTSE at 1.03%. Germany's export-driven DAX at 0.6%, and Euro stocks at about 0.5%. England's FTSE is wavering on either side of zero, with mining shares down nearly 5% and costing the index dearly. At the moment, analysts are expecting a huge central bank stimulus, since latest projections of the ECB's excess reserves are over €1 billion. But the zone's lingering debt crisis should come back into focus in October. Not just in England, German producer price indexes showed an improvement on Friday for July, exceeding expectations at a 0.2% rise. In the U.S., this afternoon's bond auction should also see some optimistic performance, with Treasury yields rising on Vice Fed head Stanley Fischer's comments yesterday regarding an expected interest rate hike. The dollar has been rising against most peers as employment and 2% inflation targets get closer in range. Retail sales in Canada, though, have been a disappointment, with inflation down on Friday and expectations for wholesale prices today to steady at 0% change. In Asia, Japanese government bonds remained depressed by very low trading volumes overnight after Fischer's pro-hike talk and Bank of Japan's Kuroda's hints that he may deepen negative interest rates. Investors await his speech tomorrow to clarify expectations. And hawkish Fed comments are also costing Australia government bonds, which slumped overnight. Yields, which move inversely to price, were up 4 points for both 10- and 2-year bonds. The dollar surge is also costing gold its markets, as a lower price per dollar translates into higher prices on foreign markets. Miners like Glencore and Anglo America swung lower, and Mexico's mega silver miner Fresnillo actually reported a loss. West Texas crude took a double bottom this morning at $48.20, and yesterday's $48.60 support seems to be a thing of history. Analysts believe that last week's surge was overstated, and they're expecting Brent to remain below 50 for the near future. To help matters, China has been upping its exports of refinery products, and the excitement surrounding OPEC's meeting with non-OPEC producers in Algiers in September seems to have worn off. The U.S. on Friday reported yet another 10 drilling rigs online, as shale producers scramble to take advantage of currently elevated prices comparatively. Events-wise, we're still awaiting Chicago's National Activity Index and wholesale sales from Canada, both at noon Greenwich time. Then at 2:30, the Conference Board's leading index for Australia. After midnight, there will be China's business sentiment at 1:45 a.m. GMT and Japan's manufacturing PMI 15 minutes later. That's it for today. Come back tomorrow for our London report, and in the meantime, have a great trading day.